The global rally is keeping our markets higher. We're up 2%. The Nifty is well over that 17,200 mark. Mid-caps moving in step. Very, very strong advanced decline ratio of about 7 stocks in the green for 1 in the red. Siddhartha Khemka, Motilal Oswal Financial Services also joins us on the show now. Siddhartha, morning, and thanks so much for joining in. Wanted to get your thoughts in on two sectors. One is banks and the other one is the FMCG sector. We've seen the Q2 business updates trickling in from many of these stocks. So in the banking side, HDFC Limited, HDFC Bank, Innocent Bank, have come out with their business updates yesterday with CSB Bank also talking about, how the quarter is going to shape up. What have you made of that? And what does it tell you about how this earnings season is going to be for the banking sector? And secondly, Marico's business update appears to be a bit muted. So what does this tell us? What are the implications for the FMCG sector's earnings?
Yeah, very good morning, and wish you and all the viewers a very happy Dussehra in advance. So if you look at the quarterly setup, I think banking is something which has been consistently now reporting strong numbers quarter after quarter, and the same is the expectation for Q2 as well. The pre-quarterly updates for some of the banks, NBFCs have started coming in, which only indicates the strong growth in the credit offtake. So the loan book growth is pretty good, that is expected. The asset quality has already, we have seen the asset quality cycle going through the bad patch, and then all the banks, NBFCs providing for bulk of the bad assets, and from now on here we are seeing the healthy recovery in the asset quality as well. So I think overall, if you look at the setup, the business is being driven across segments, be it the corporate, be it the SMEs, the retail segment, and some of the pressures that we saw some time back, especially in the retail segment, that is now again kind of improving with the strong demand in the festive season, and the kind of capex announcements by a lot of the corporates. I think the overall banking sector looks good. The larger banks focused, having a much diversified book and also focused towards the large corporates, would be the ones which will show a higher growth. So be it the ICICI Bank or the SBIs of the world, they would be the direct beneficiaries of this credit growth in the system.
Okay, hi Siddharth, morning. One of your picks that you're betting on is Bharti Airtel. But, the stock has hit a 52-week high just yesterday. What is the upside that you see here now on the back of the 5G rollout?
Yeah, Sumera. So if you look at Bharti, we have been witnessing continuous improvement in the profitability, and also the company has been showing sharp improvement in the ARPUs despite taking very few, you can say, price hikes. And that is mainly because of people uptrending towards the 4G services. And now with the 5G rollout, the biggest concern was the capex that would go around implementing of the 5G. Now that concern is abated a lot. The company has already launched 5G services in key 8 circles, and the management has said that they are looking to roll out 5G across pan-India by March 2024. If you look at the overall financials, they continue to remain healthy. We see consistent 20% growth opportunity. The 5G capex concern has abated. The company has been generating a lot of cash flows, is the best positioned to benefit from the improving ARPUs, which will now be also aided because of the 5G rollout. So overall, our target is about 910. Which gives an upside of about 11-12%. But I think with the rollout and the progress in 5G, we could see further upside as well on the stock.
Okay, so 910 is the target price on Bharti Airtel. Siddharth, real estate stocks have been on an upswing. In that, you're betting on Mahindra Life Spaces. Can you tell us why you prefer this stock over the others?
So, Rima, if you look at, we have been positive on the entire real estate pack, and we initially started with coverage with the Mumbai-focused players, where we like Oberoi and Lodha, which is the macro tech developers, and then we started covering some of the south-based players, which also looks kind of a better place. So these are the two regions where we believe the Bangalore and Mumbai related regions. These are the two regions which we believe that the demand supply environment is constructive. And in that, we have recently initiated coverage on Mahindra Life. If you look at the overall Mahindra group, they have seen the kind of change in the management, the change in strategy, helping a lot of these group companies. And that same change is now, aggression is also visible in Mahindra Life. After several years of stagnant growth, we are now seeing that the pre-sales growth, the management is targeting almost 2.5x increase from about 700-800 crores of pre-sales to 2,500 crores of pre-sales annually, which is achievable in the next 2-3 years. They have added newer projects. The pipeline has improved. And we believe that the overall industry tailwinds, especially for the Mumbai and Pune, where this company is mainly focused on, will help shift towards branded developers. And hence, we believe that Mahindra Life is geared to benefit from this growth potential, especially given the change in the management as well as change in the strategy. So there we have a one-year target of 550.
Okay. It's not, but overall, do you see incremental bouts of volatility now? I mean, what is the outlook from here? What is your house view?
So if you're asking about the overall market, yes, there are several global headwinds which would increase the volatility, as we saw what happened on Monday, and then so Friday we had a sharp uptake, then Monday we had a fall, and now today again because of global uptick swings. So these things will keep on happening because of several global factors, be it the interest rate hikes, the inflationary concerns, the recessionary fears, and then you have the dollar index, the crude price. So I think in that environment, India looks pretty steady or stable. The domestic macros are pretty stable. India's GDP growth, you see the GST collection, advanced tax collection, manufacturing PMI, all looks pretty stable in this global environment. FIs have again become net sellers. That again because of what is happening with the US interest rates, where the risk of mode comes down intermittently and can lead to a volatility. And if you look at what is happening in India, the valuations had reached long-term average or marginally above long-term average at about 19 times on Nifty. So any correction definitely gives a good opportunity for investors to get into those stocks. We saw healthy profit booking in some of the consumption-driven stocks yesterday, be it the retail stocks, auto stocks, after declaring such good numbers. So I think that would be a good opportunity for people to look into their favorite stocks and get in those days of volatility and correction.
Thank you very much, Siddhartha, for joining in, and season's greetings to you as well. It's time for us to slip into a very short break, but when we return, amid the turbulence in the currency market, we get you a special explainer on companies with a higher forex exposure. Stay tuned.